Prices are dropping, demand is dropping, inventory is rising, and so are interest rates. So with all of these things, does that mean that a crash is imminent? Let's take a look at some information that will help answer that question. So I was just talking to a client of mine about this, and she said to me, she's like, you keep saying that the market isn't going to crash, but everywhere else I look says that the crash is coming. Well, so are you guys seeing that too? Are you seeing that it's a crash or that it's a correction? Which one are you seeing? I want to know. Let me know down in the comments. And if you're reading anything online, I know what you're reading, and you're getting headlines that say things like this: we're in a historically overvalued housing market, and these cities could see home prices drop 10%, Moody says. This was a headline from Fortune. Now, the article goes on to say that there are a few cities in Arizona that are considered overvalued, but the number one overvalued city is Boise, Idaho at 75%. Now, the Phoenix area, they're looking at about 55% on this overvalued number. But to put a little perspective on this, Moody's own analytics say that 96% of cities, all cities, are all overvalued. Now, whenever I see articles talking about Arizona and what's going on in their real estate market, I always go to my trusted local source, the Cromford Market Report, which we are going to get to in a minute so that we can really look at, is what they're saying accurate? Now, I found another headline by Insider, and I was actually really surprised because it didn't use the word crash in the headline. It said this: a housing crash is unlikely, but a correction could be around the corner. They then go on to say this: talks of bubbles inevitably leads to the question of whether the bubble will pop with a crash or more gently ease back to earth in a modest correction. The former would entail a gradual drop in prices to more sustainable levels, whereas the latter would result from either a rapid drop in prices triggered by widespread panic from homeowners and investors or a wave of foreclosures. However, with homeowners leveraging more than $3.2 trillion in home equity and mortgage lenders enforcing strict standards, it's unlikely the real estate market is heading towards a crash, especially the likes of 2008. Now, we've talked about this on my channel in the past, that homeowners have substantially more equity in their homes, and just the way of loans are completely different than 2008. So if they have a good job and can afford their mortgage payment, they will not be in jeopardy of losing their home. Mark Zandi, chief economist for Moody's, does not see a housing crash coming in the next year either. However, he does say overvalued housing markets could see home prices fall 5 to 10% over the next 12 months, while national home price growth flattens to zero. Why? The economic shock caused by spiking mortgage rates this year, he says, should finally rein in the rate of home price growth. We're already seeing signs of a cooling housing market. Which I agree, we are starting to see signs of a cooling housing market. Now, the same client that I was talking about at the beginning of this video asked me about a house that sold on her street. And she just said, I'm just really curious. I wanted to know what the house sold for. So I told her what the house sold for. I then went on to tell her how much down they put. And she was absolutely shocked because they put almost $1 million down. She said, who does that? And I said, you would be surprised. There are a lot of people out there that are putting a lot of money down. Just like we talked about, remember, $3.2 trillion in equity? People are putting a substantial amount of money down on their homes. This is one of the biggest reasons why I and many others do not foresee a housing crash coming. So even if the home does go down in value by 10%, they already know what their mortgage payment's going to be, and it's fixed for the next 30 years. Well, 20 years if they've owned it for 10 years already. But I just don't see it. Even if they lost their job, they could probably still sell their home and come out ahead. Now, I don't know that I totally agree with the 10% that home values will fall within the next 12 months. I think that seems kind of high. I think we're going to see a little bit more of a flattening. We are going to see a little bit of a dip, but I don't know that it's going to be a full 10%. So the only real things that I see threatening the housing market right now are our overall economy and our inflation. If our inflation does get so bad that it starts to put pressure on those small to mid-sized businesses where one, they might have to lay people off, or two, close their doors, our unemployment rate is going to start to change, which then is going to put people that have just lost their jobs into kind of a financial pinch, really. Their income is going to drastically change. Again, though, with their equity that they have in their home, I don't see people turning to short sales or foreclosures like they did in the last downturn because they were on an interest only where the interest rate fluctuated and their payment fluctuated. They're on a fixed rate right now, so they know what their payment is. They've got equity in their home. They could turn around, they could sell it and still walk away with money. So what is the Cromford Market Report saying about our current market? They continue to say this: prices are expected to continue rising, but slower sometimes over the next few months. The market began turning in mid-February, but is speeding down due to interest rate. Now, if you remember in a previous video, I talked about this, that for the last 4 weeks, and this was in the previous video, so now it's been about 6 weeks, I have been talking to my clients about the market seeing some small shifts. One of those shifts is watching the rental market. That is the first market to change. We've started to see the inventory start to increase there. And now we are starting to see that rental rates are not going, their rentals are not getting what they're asking for. They're actually having to come off of their rental price just a little bit. So it's, again, something to keep our eye on. We are, however, still in a seller's market, but we are starting to see a lot more price decreases. Now, I believe that a lot of that has to do with the fact that people are putting their house on the market really, really high, just testing the market, maybe not understanding what's going on in the market right now, that there actually is a shift occurring, and they're just testing it. So if they don't put it on the market at the right price, they have to make a price adjustment, and then they kind of test it from there. Sellers, I caution you, I have seen this in the past when we're in this crazy shift time period. Really, if you are working with a seasoned professional that really has their finger on the pulse of the market, listen to them. This is the time to lean into what they're telling you if they really know what they're talking about. They know what's going on in your market, and you need to heed their warning, I would say. If they're telling you a price and you think, gosh, that just seems really low, it's probably not. And I will tell you that because we still are in a seller's market, if your house is great, fantastic, we still have buyers that really need to get into homes. So you will probably still get multiple offers. But if you price it too high, just don't be chasing the market down. I've seen sellers do that too often, and it never ends well. Overall, the measures that need to change for all sales prices to change are these 3 things: a rise in weekly price reductions, increase in the days on market before a contract, see more seller concessions on a contract. Right now, the only one that we're seeing a rise in weekly price reductions. The other 2 are staying exactly where they were. We're still seeing the same average days on market to get a home sold, and we are not seeing an increase in seller concessions at this time. So it's just telling us that we are still going to see prices rise. I hope this information was helpful. If I can answer any questions at all, please feel free to reach out, call me, email me, text me. Don't forget to like this video, and hey, hit that subscribe button so you don't miss anything else. As always, I thank you for watching, and I'll see you next time.